So upward strategy, downward strategy. Try to avoid like a lot of people, and this is the biggest mistake people make when they trade. And again, we're following great signal providers, but for those that are attempting to do their own trades eventually and take your time with that. But as you start catching your own trades, never try if the trade if the market is hitting the top of the trend at the level of so-called resistance, you don't want to place buy orders right where the market is touching the top, because typically gold likes to hit a nice top barrier and reverse down. That goes back to our whole resistance conversation. Okay, so you don't want to catch just the tops and the bottoms, because you want to give the market needs to do certain things for you then to enter in again. Okay, and professional traders follow momentum. Now we're going to go into candlesticks. Okay, now every candlestick tells a story. Now candlesticks are one of my favorite studies, because when you understand candlesticks, your life will be much easier. I can tell you that for sure. Like I have been studying candlesticks from when I first started trading. I really started to understand the Japanese candlesticks and the power of the candlestick. When you understand certain types of candle, now there are various different candlestick types people talk about, but I'm going to introduce you guys to a candlestick that is the most important candlestick in the world. Who wants to know what that is, guys? Let me know in the chat box. Who wants to know what that is? Okay. Now, there are different types of candles. Now, of course, in this chart here, you have bearish candles and bullish candles, okay? I'm going to zoom in on these bad boys. Candlesticks is what makes the money, okay? Now, there is a candlestick called the bullish engulfing or the bearish engulfing. So basically, I'll break down what the candlesticks are. So candlesticks represent the movement of that particular asset class, that particular currency, right? And let's say, for example, this is a 15-minute chart, which means every single one of these little candlesticks is representing 15 minutes in movement of the gold market. If I was to change this to the 1 hour, okay, this is the same currency, but now each of these candlesticks reads 1 hour. So 1 hour of movement would complete one candlestick. So each one of these little babies right here, the blue and red ones, the red means that the market price is going down. It means that on the blue means that it's going up. Okay. Now, bearing in mind, guys, don't forget that gold is the measurement of gold as like per ounce. So right now, gold is trading at $4,487 per ounce, right? Now, this is the price of gold according to this particular broker here that is on this chart. So this is showing us, right, the movement in that particular hour. Now, you have 1 minute candles, 5 minute candles, 8 minute candles, 10 minute candles, and each candlestick variation, or each candlestick duration shows you a different movement. Now, the 50-minute chart looks different from the 1 hour chart, but there's still an overall trend, and there's something called multiple time frame analysis, which again we'll go into another day. But basically, you're able to look at different time frames and decide where you believe the market can go. And of course, as you're looking at the synergy trades and all those different educators, you're able now to look at saying, why did they call that trade? And it's important to go into the market and look at the kind and just study, and just sometimes I just spend time staring at the chart. Not every single minute you have to execute trades. Sometimes just spend some time looking at the chart, just doing nothing. Sometimes you can make the most money from doing nothing. It might sound counterintuitive, but actually it's true, because you can make the most money by just looking at what's happening and just and it's almost like an art, right? They say that it takes 10,000 hours to master a craft. Why is a rapper like Drake like the best? Like every album he drops is always why? Because he's been doing this for so many years. He's such a master at his craft. He can make a song in 5 minutes because he's studied it. He's gone over melodies, album, songs, lyrics, writing lyrics all day, all night to his hands are black, to his hands are red. Ronaldo or Messi or any football player, anyone that you admire that is successful in their craft, they are successful because they've spent years, decades locking in on their craft. And I'm not saying we have to spend decades before we start making money, because some of you have made money in your first week in the community. But I'm saying part of trading is analysis. It's not always, the biggest part about trading isn't the trading itself. It's actually the analysis and getting your eyes to tap, like training your eyes. Gabriel, these were plenty ratchets. Yeah, he does, definitely. You have to train your eyes to see the trends. Like, for example, I can look at gold and I can compartmentalize it in 5-10 minutes. I can look at what's going to happen. I can say, okay, this is going to be a buy. Here's the key levels. Here's the major reversal areas. Because again, I've been doing this for so many years. I've put in my 10,000 hours. So over time, you have to start just looking. Again, your play, and this is the best part to do it, is after you've made your daily target. Once you're done for the day and you make your money in the morning, now you can spend a couple of hours looking at the chart and look back at the trade that you took that made you money and say, okay, the market went here, it hit this level, okay, the wicks was so high, okay, would I say the current trend is downward or upward? I'm looking at it. Well, as I said, look, if you minimize this right now, it depends on the time frame. So if I go into the 1 hour chart, gold right now, honestly, it's been trending upward. Like in terms of, if you look at for the past few years, if I go on to the weekly chart, you can see how crazy gold has been trending. Look at that trend. Look at that. This is the weekly chart. So you can see here how gold has gone up over the years, right? If you go into the daily chart, it's still trending upwards, but there's been a little bit of a pullback here, but gold has still been going up. If you go into the 4 hourly chart and you go in here, it's still been a nice uptrend, but a little bit of consolidation and so on. So it depends on what time zone, what time frame we're looking at. I would say right now in the current situation, gold has no clear trend. It's looking like it's going down currently from this zone here, but it's choppy right now. It's choppy right now. I think it's hovering between the 4,200, 4,300 region and going up to the 4,700s, coming down, going up. But that's why with gold, we're trying to catch the right move. We're not trying to be in the market for a whole 2 weeks. We're trying to catch a good move and exit. There are loads of mini trends I can talk about. There's loads of like really good 1,000, 2,000 pip moves, but then the market will reverse. And that's how trading is as a whole. You're typically going to have days, sometimes weeks of a certain trend, and then the market will reverse. And you have to be able to secure your profits before that happens. Okay. So candlesticks, the candlesticks represent a movement in time. Now, in the candlestick, you have those little skinny lines that I'm sure you've all seen. These are called wicks. Okay? These are called wicks. And these wicks are very important because these little bad boys show you where the market has been pushing up to. It shows you the maximum point. So for example, let's say if this currency, this is basically, this candlestick ended here and it closed here and opened here. So you can see the line is always going to be, the opening of the next candle is always going to be next to where the other candle closed. Can everyone see that? So the market closed here, the candle closed here, the next 1 hour opened, and then the candle went up and down, up and down, up and down. It went all the way up here, right? All the way up here. That's a squiggly line, 1 second. It went all the way up here, like this, and it came back down again, boom, boom, and then closed here, and opens up here again. And it does its thing, closed, opens up here. Can everyone see that? Boom, does its thing, closed, opens up here, then opens up there. And it keeps on opening and closing. Now there's something called a market gap. So for example, in this situation, the market opened, there was a little bit of a gap, boom, the market dropped, and there was a bit, again, gold can move erratically, especially when the market reopens after, when the Asian session opens, which is after 10 p.m. or especially after Sunday when the market reopens again. What's better to analyze charts? Definitely TradingView. MT5 is for executing trades. TradingView is for analyzing the market. Okay. So these little wicks show you where the price had been pushing up, but it didn't close there. It shows you where the market pushed up, but the market wasn't strong enough, or the price wasn't strong enough to maintain that price for it to close in that region. It hit the wick, but it came back down and it closed somewhere else where it was most comfortable. Does that make sense? So that's pretty much candlesticks. You know, why candlesticks are important, because candlesticks are where you're placing orders. You're placing orders via candlesticks. The candlesticks tell the biggest story. And that's the whole idea, is you're looking at the candles, you're trying to find out where do you believe the market's going to go. And you have to be patient to look at the patterns that these candlesticks are going to create in order for you to get the right entry. Okay? We're almost done. We've got 5 minutes left. So let me just quickly show you guys this last one here. Multiple time frame analysis, right? So this is basically looking at a very basic run through of the different time frames. So when you're analyzing the market, or when you start analyzing the market, the daily chart would show you the overall direction of the market. So the daily time frame, right? The 4-hour chart shows you pretty much market structure. And 1 hour or 50-minute chart shows you the entry. So if you see a lot of traders in our community and even in the world, a lot of them enter on the 1 hour, 30-minute or 15-minute chart. Okay? And not everybody. If you enter off the 4-minute, off the 4-hour, or if you enter off the daily, that's a real long-term trader. But if you're looking to make money within the day, which is day trading or even scalping, you're looking to enter on the 50-minute, 30-minute, or the 1 hour. Now, of course, we have the blessing of having a wonderful system, right? We have synergy. We have the traders who are consistently dropping 25 plus trades a day. So you don't have to go into TradingView and try and find your own trade. I'm not saying that. I'm just saying we want you to understand why the market moves a certain way. We want you to get to the place where you can start understanding, even right now, just the basic terms. I'm not pressurizing you guys to start, just randomly entering buys and sells in the market, because that's not going to end good, right? What I want you guys to do is to understand why there are multiple time frames, why there are candlesticks, why are there wicks, why does the market move up and down, what determines where the market goes. And that leads me on to my last point, which is the wonderful website called Forex Factory. what times do you prefer to trade in the day? Definitely in the morning. That's where the money's made because I've got a busy schedule. I work out 6 days a week, family life, business, thousands and thousands of clients, multiple businesses outside the trading, multiple people to meet. There's a lot going on. So for me and my lifestyle, I work out. I work out in the morning, but I also try and trade even before I leave to the gym. Try and make my money for the day. So I'm not like in the gym distracted, or I'm not like I'm literally doing my thing, but I've made my money for the day in the morning. That's the best way to do it. But everyone's got a different schedule. It depends on what you want to or how you want to do it. But I typically do it in the morning. Okay. So there's a website here called Forex Factory. Let me just get it up. Just a little bit. Let's see. Okay. This website, guys, and we've spoken about this for years. If you've known me for any amount of time, you would know I have been preaching Forex Factory for the longest. Okay, this is a wonderful website that really gives you a real breakthrough, a breakdown on the markets, gives you a breakdown on what's happening in the markets, what's happening in the economy. There is something called there's high impact news, low impact news, and medium impact news. And so when you go into this website, you're able to see which currencies are going to be affected by a certain news event. It might be that the government is going to be speaking about the services of the country, or there's an issue with the oil of that country, or there's an issue with something called the NFP, which is the non-farm payroll. These are huge news releases, and that's why I say become an economist. So you're able to look at what's happening. You're able to know what the FOMC is. You know what the GDP is. You know what the CPI is. You know what NFP is, and these things are important just to know. So you're able, like I've made the most money I've ever made in one trade was from the NFP, right? Literally insane amount of money from, and again, that's not for everyone. Not everyone should be trading major releases because it is risky. The market could go either way, and you could really have a very interesting experience with that. But it's important to know which news releases, and you can see by the red folders. These red folders, if you see someone in London walking around with a red folder in their hand, just know that they're a serious trader because that person knows more than you think they know. They understand what's going to happen. So very, very, very important to look at this website and gather information and really understand this, guys, and get to the place where you can be an economist, guys, and understand market structure, guys. So appreciate every single one of you. Thank you for coming on to day 2 of the boot camp. We'll be back tomorrow. We have a wonderful superstar, Araba. She'll be on tomorrow, and she's going to be going through mindset and psychology, guys. So be on that call tomorrow. It's going to be incredible. Thank you for being on day 2 of the boot camp. I hope you guys took an insane amount of notes. And as I always say, I'm going to see you at the beaches and most certainly at the banks. Have a good night. God bless. And I'll see you guys tomorrow.